Happy VA Wednesday. So today we're going to be talking about a question I've been getting a lot recently. Karen actually posed the question recently on my channel, and we're going to walk through her scenario, what my suggestions would be, and what I want you guys to keep in mind if you're thinking of doing this. So first of all, if you like this content, hit the like. If you haven't subscribed, please subscribe. And if you just tune in because you hate me, hit that dislike button. Okay, that was for the algorithm. Thank you guys. I have to do that now, I've been told. So what was Karen trying to do? So Karen is actually living the dream, and I love her strategy. I just want to modify it a little bit. So Karen bought a house at her first duty station. Awesome, yay. And she's PCS'd, and she turned that property into a rental. Cool, okay, cool. So she has the original VA loan on there. She turned it into a rental. She wants to buy another house at the new PCS station. Based off her question, I'm assuming she has enough eligibility to have both, which is great because you can have multiple VA loans at once. I've had clients that got four, I think 5's the highest I've seen, 5 VA loans at once. So for anyone who's telling you you can only have one VA loan at the same time, that's not accurate unless you used up all your entitlement. So my Hawaii friends and San Diego, California, yeah, you probably can only have one because you bought $1 million house. But for everyone else in the country that's buying $200,000, $100,000, $300,000 houses, you can have multiple houses at the same time. So that's first. Now her question was, hey, how do I get money out of this house to pay the VA funding fee as well as closing costs? Okay. Number one, the VA funding fee is financed into the loan. You guys do not need to worry about getting that money or having money to pay the VA funding fee. The VA funding fee is always financed in the loan unless you tell us you want to pay it out of pocket. Number one. Number two, she wants to get the money out for closing costs, okay? Now look, if there was an easy, affordable way to get the money out, fine, but there's not. Let's just be honest and blunt. So if she wants to refinance that property, there's not a VA cash out refi. So she's gonna have to do a conventional investment cash out refi. Whew, let me tell you about the pricing, guys. That is horrific. Now, my guess is she probably has a beautiful rate of below 3% because that's what we see from that era of VA loans. Pretty much anyone who bought 2020, 2021 or had a home they refied, they're 2 to 3, maybe 3.25, right? Guard that loan with your life. Seriously, guard it with your life. Do not let some con artist lender tell you that it's a better idea to get money for closing costs out of your house because that rate, that conforming investment cash out rate is gonna be 2.5, no more than that, hold on, well, it depends. Let's just say her rate's 3, okay? It's gonna be 2.5 to 3 times more. That screws up your return on investment. So if you're really trying to keep this property as an investment property, the way to make money is to have the lowest rate possible. If you already have the lowest rate, do not screw with it. I can't stress that enough, especially for closing costs, which in most states aren't that bad. And in many markets right now, I talked about the VA housing market shift. I am seeing it more and more and more every day. I am seeing people get closing costs. So a market that might have been competitive 30 days ago, it's not now. And the reason it's not is because the recent jump in rates, it has freaked conventional buyers out, freaked them out, because, you know, we have been quoting our VA 0.75 to 1% lower than conventional rates. Yeah, I mean, our VA rates are smoking, but yeah, so it's way scarier at that higher level. So there's less competition in markets right now. So I would be saying, Karen, please don't ever touch that loan. I want you to be a successful investor. Don't touch that loan. Guard it. Okay, so then the next question is, what about a home equity line of credit? Okay, here's the trick. You need to do that as an investment. You've got to find a lender who's going to do an investment property home equity line of credit, and it can be few and far between. So that can be challenging. You're going to have to see what the interest rates on that are. It might be 12, it might be 13%. Who knows, right? You're going to have to see what are the fees. Now, the easy solution in my head is, let's get a really aggressive real estate agent. Let's look at the market. Let's see if you can negotiate closing costs, because then you're not touching this. You're keeping that beautiful ROI, and you're not getting into a HELOC that's, you know, drama, and they're paying the closing costs. And I really, really believe, guys, we are in a market that we can do that. There's only a couple places in the country where I'm still seeing some issues with it, but just to give you guys a taste, you know, Houston, Dallas, you know, Dallas especially, oh my God, Dallas in 2021, people were like, you'll never get, we did still get closing costs, but now it's super easy, right? There's been a shift across the country. Even in Colorado Springs, we're seeing people help the buyers with closing costs, and it's because of how fast rates have gone up. So my suggestion to Karen, my suggestion to all of you guys is, if you have a VA property that you think you want to get cash out of, buy another house, try to find every other way you can without touching that property, okay? This is like in case of an emergency, break it. But until you've been looking for a month, 2 months, 3 months, and you can't get anyone to accept your closing costs, right? Asking the seller for the closing costs, do not touch this. And at this point too, you have to see if you're working with a real estate agent that's a negotiator. There are real estate agents that are negotiators, and there are real estate agents that just say no. Who are you working with? Just because someone says no, it's impossible, doesn't mean it's impossible. I literally can only think of one part in the country where it's like kind of a joke to try to get closing costs, and it's not even a hot market. It's just like this really small town, and like it's just cultural. It's very bizarre, but that's one place in the entire country, and I don't think that's where Karen is. So I've got a lot of hope for Karen that she's going to be able to get this house and get them to pay her closing costs. But really stay away from this, guys. And if a lender's telling you to pretend that you live there and do a cash out refi, they're screwing you for your purchase. Because whenever you're purchasing a house, we're going to be looking at any mortgage you've taken out within the last 12 months to see if it was owner occupied or not. So whether it's a cash out refi or a HELOC, if it says owner occupied and you took it out within the last 12 months, and we can deduce that you committed mortgage fraud, which it is mortgage fraud if you say that it's owner occupied but you don't live there, okay, you're not going to get this loan. So be ethical, be honest, and find another way is my top tip. So yes, as a mortgage lender, I just spent 6 minutes telling you guys not to take out a mortgage in this situation. Thanks for watching. As always, if you need advice on mortgages, or you need a mortgage, or you want a VA mortgage, I'm licensed in 48 states, everywhere but Rhode Island and Utah. So please reach out. I would love to help you guys.